Welcome back to the 22nd July Advanced Lecture Series of 2025. It's the 22nd Tuesday. Today I want to talk about real probabilities in the market, how to visualize probabilities with what I've been sharing. And I do this most days that I trade. On days that are unclear of what it's going to do next, I always have the probabilities of what it will definitely do. And then on days that it's really clear, then obviously I don't need it as much, but it's just obvious. So I want to talk about probabilities. So if we know the market moves like this, that's it. There's no if, but, or maybe. It moves up, retraces, moves up, retraces. So we then get a move up. What should we then expect? A retracement. Then from here, what can we expect? Well, it's either going to come up here or it's going to come here and sell off. So the probability of making a high and then retracing happens in both outcomes. Either we come up, retrace, and then go back up to the high, or we come up, trace, and then start going lower. Probability is this move is going to happen. This move every time. So if you know that the highest probability move is this move into the retracement, that's your trade. You don't need to care about, when we get down here I'm going to buy up, because that's not guaranteed. We could keep selling off and then buy up, or we could do this situation. You buy here, you get in profit and get stopped out. The highest probability move is this move lower. That's all your trade needs to be. And I use this all the time. Every single video I reference the same image. This can be a trade. 9:30 opens here, short to the IRL. 9:30 opens here, you can long up. This is it. This is fractal. This can happen at any. This could be a 4-hour time frame. This could be a gap. This could be daily time frame. The probabilities of this move happening, this retracement, is guaranteed. It's almost it's almost, well, it's not going to be 100%, but it's a lot higher than trying to buy out of it, or trying to, well, sell. Like, in my brain I'm making sense, but the highest probability move is this move lower. You don't know if we're going to buy up after it, and you don't know if we're going to sell out of here. But what is guaranteed is this move. So this is your trade. This can be any time frame, fractal time frame. This is the highest probability move every time. Like, a lot of guys go, okay, I'm going to buy out of this area. How do you know it's going to buy up? Obviously, if you have high time frame narrative and, you know, everything's perfect for your strategy or whatever you do, great. But taking it at just face value and that you don't know how the market moves and high time frame wise, the guarantee that this move is going to happen is very likely. When we get to this level, this would be taking profits or partialing. And then obviously, if we was in shorts and we put our stop here, obviously this retracement would go lower. So this would give us a bearish higher time frame narrative, hence why we carried on lower. Here, you can still trade this move down. 100% you can trade this move down. Just like you could buy this move up into like here. Because then the same logic would apply. With this, we're either going to come up and sell off, or we're going to come up and come into here. Either way, we're going to come up to the high probability move. You get what I'm saying? I don't want to make it too confusing, but I just want to show you an example of this yesterday. I'm going to leak all the chats, but these are the M15 ones we have right now. I'm marking my buy side. Scenario 1 here, we come up to this and sell off. Scenario 2, come up to this, retrace, come up to this and then sell off. Both outcomes we have to go higher first, so the common denominator is bullish bias. So I'll show you yesterday. We went straight through it. So obviously I had levels. I think they were like this level and like this level. What did I say? Scenario 1 where we're going to come up here and sell off, or come up here and sell off. However, the highest probability move was longs. Now obviously we didn't do that. We just longed straight through it all, and then I got a buy around here, and you could have also sold here post 10:30, which I called into this area of sell side liquidity there. Could have got this move up. So yeah, I don't need to cover this. This was in yesterday's video, so go and watch that about all the call outs that I made for this. It's coming out today. No, let me check. It'll be out tomorrow at 9:30. So go and watch that if you want the source, if you haven't seen it already. Yeah, I'm just trying to talk. Probabilities are the move that is going to happen. Just like here, right? I don't think we actually took this high. Did we take this high? No, we didn't. So when you're here, the highest probability move, either we come down to here and buy up, or we come down to here. Obviously this is very specific, so I'll just use the body, and then we carry on selling. In both scenarios, alright, so it would either look like that, or it would look like this. Alright, highest probability move is this move lower. So forget the 15-minute chart. This is your daily chart. Alright, daily. We're definitely going to drop lower. This is your 4-hour chart. Definitely going to drop lower. So you can short into this move. Higher time frame probably bullish. I mean, we've just taken out all-time highs, but like forgetting all-time highs, just using this fractal, you'd probably be bullish in here. So yes, we could definitely come back up to this high. I think we have S&T on it. Yeah, we do. We have S&T on it. But regardless, this move lower is expected, because in both scenarios it plays out. Likely, potentially, we could reverse off this sell side liquidity. We'll see though. But yeah, that's enough source for today. Didn't want to confuse it too much, but yeah, there's like here, either I'm going to make this high, come to here and then buy back up, or we're going to make this high, come to here, retrace and then sell off. Both times the move lower is expected. So you get what I'm trying to say. So I'm I'm going to show you one more time this image. I'm not going to speak, just look. If you genuinely think about this image and the fractal nature of this image, it's all you need. Simplifies everything. My biggest issue in trading before was I'd be bullish in trading was that I would have, okay, maybe a bullish bias out of this gap. That's what I would say. I would say once we get to this gap, I'm bullish. Expecting this move back up. But when we got to this gap, I would find that price would then come up, put me in profit, and stop me out of this ERL where my stop loss would be. Because the highest probability move isn't to buy out of this gap. The highest probability move is to sell to the gap. So I had it all confused. You don't want to say, once we get into this gap, this high time frame gap, I'm bullish. Because that is trying to predict the market. You don't want to predict the market. You want to observe where the draw on liquidity is, and you want to trade where we're likely to go, not to predict every single thing. When you get more advanced, you can obviously try and use all your knowledge and say certain things that could happen if you've got a clear understanding of the market. But for now, I want you to understand that if you've got a gap that you might want to be bullish out of, okay, what you need to realize is the higher probability move is to short to the gap. Unless we're already in the gap, you don't want to be looking for longs. Your trade must be the short into the gap, just like this image. 9:30 opens here. In order to continue the daily / high time bias, my short to the IRL. So that is your trade. Trade is to short to the gap instead of trying to buy out of it, because we know that markets don't move in a straight line. So if you try and buy the first move into the gap, what's likely to happen? Likely to get stopped, because when we come into gaps, we don't just tap them, we fractalize gaps. So let's say this is the hourly, we may then have like a 5 minute down here, and then maybe an even fractal 1 minute down there, and price will move like this. But the high probability move for your trade, 9:30 opens here. 9:30 opens here. You sell to the gap. You don't try and get the buy, because you don't know how deep we want to come into this gap. And we may even have a gap below it that it may want to draw to before going up. So the highest probability move is to sell to the gap at 9:30. If this is where we are, you can then look for shorts into it. If 9:30 opens here, great, you can try and look for longs out of here, because you're already in that area. And if the higher time frame is bullish back up to these highs, then cool. Obviously I'm saying this as if you understand higher time frame bias, but I'm just saying short term bias, if we've got a gap and you're saying you want to be bullish out of it, cool, but just short to it and then see what happens. It's only when you reach this level of understanding that we're not just going to tap the gap and run. We're likely to come a bit deeper into the gap to balance that area, and that's going to be a separate lecture. Okay, so I'm going to do that lecture later today, and it will come out after this video, after the market review. But yeah, that's it. I'm going to leave it there.